Here's the last assignment for week 2. So are you ready for this? This is the discussion case. We will not do the financial statement part, just the first part here. So this is just a kind of a plug and chug. You got to think about it. You're thinking about buying a business, and what you're looking at is you will pay 20 times the net income. And then they give you the numbers for this. So what you have to do is you look at your trial balance and you see you have a service income of, you can barely read that, $12,300, and the trial balance doesn't include $3,800 worth of revenue. So you'll add those two together and put that there. Then the next thing you'll find is your salaries expense. And your salaries expense is from the trial balance is $3,400. You have a utility expense of $900. You have other expenses that are unrecorded that it says up here in the activity of $1,100 right here. And then you're going to add the salary for your manager of $5,000. So your expected net income, if you have revenues here, expenses here, this will give you your expected monthly income, and that actually comes to $10,400. You have to fill in the blanks up here. Now, if you multiply that times 20, this is what you're willing to pay for it. Now, this amount you're going to fill in and make it match this amount. Then we're looking at the lowest price, Nicholas. Let's see. Nicholas states that the least he will take for his business is an amount equal to the business stockholders' equity balance on January 31st. Compute this amount. Okay. Well, we're going to kind of play with numbers somewhat. So you are going to have a beginning balance of, does it tell us? You have a beginning balance of I'm back. We have a beginning balance of $110,400, and that's found by adding the common stock and the retained earnings. Okay, so how do we figure what the ending retained or the ending capital is going to be? Well, you've got to add your net income, which is going to be, now you have to remember you have to take away, it can't be the one that you did on top, okay, at the very first, because that includes your expenses. What you're going to look at is the revenue of $12,300 plus the $3,800. You're going to look at these expenses, which were given, plus that $1,100, and then that's going to give you an amount for your expenses, which will give you, okay, if you net these two, that's what you're looking for, it's going to give you your net income here, which gets added to the owner's equity to begin with, and now you're going to subtract the withdrawals, which I'm assuming are in here. Yes, if you look close enough, you will find dividends that have been paid out of $9,000, and that should give you ending capital. So you're going to look at what you're willing to pay, right, versus what he wants, and answer your questions from there. This is a good activity. I think you'll like that. So, thank you much. And we're done with this week. Yay! Have a good weekend, folks.